Your Excellencies, distinguished guests, ladies and gentlemen, it's great to be back here and great to be in Miami. I mean, back always that priority event, but particularly in Miami, one of the most vibrant cities in the world, after a few of those other lovely cities that we know are thriving as well. So we have the powerhouses of the industry here that are going to be looking at what's going on in just a minute. You've heard who they are. Here we've Jenny, Chip, Shu, and Patrick. So I'm delighted that you've all taken the time to be with us. And we're really going to be looking at what's happening in terms of business in the new global order. Or is it a new global order? Are we still searching for it? So it's a combination of all of that. We're going to do our best, maybe not to give you all the answers, but we're certainly going to give you a few and give you a few suggestions. We might confuse people a little bit more, but we have the right people to do it. Jenny, let me talk to you and let me start with you first, and we really talk about globalization or de-globalization. Pick what's happening at the moment. I mean, I think the world had lofty aspirations to make this one wonderful world where trade flowed freely and efficiently, and kind of didn't work, and we've seen a few fault lines, particularly with geopolitics, a list of what's going wrong, perhaps. What's impacting investment right now, and where are the big obstacles?
Well, so here's the good news. I don't think globalization is dead. It's slowing down, and there's probably some themes that can inform some investments. So if you look at obviously the macro economic environment, the geopolitical environment, war, Russia, Ukraine, U.S.-China relations, and honestly kind of lessons learned from COVID, those I think are all impacting how people are thinking about globalization. And so if you think about just, the COVID, right, everybody learned, hey, I can't have a supply chain where I'm relying on a single country. So it's not so much that everybody's leaving China. I think it's a China plus one. So they're looking to try to add diversification, and there's, you're seeing manufacturing in India, Malaysia, Vietnam, Indonesia. I think from the geopolitical and U.S.-China, you're seeing a little bit of friendshoring. So you look at a chip manufacturer in Taiwan who spent $5 billion to build a chip factory in Japan, right? It's not because Japan's cheap and efficient, it's because they look at it as sort of under the umbrella of the U.S. Defense. And then I would say, the nearshoring, right, as economies are looking to be more self-sufficient, Mexico will benefit from obviously the U.S. nearshoring. So I think those are the big themes. And then I would say, from an investment standpoint, looking at honestly countries that are focused on entrepreneurism, on education, where the government is supporting business. I mean, I brought my executive committee to Riyadh, and honestly, they went there thinking, well, we got to raise some money, and came back saying, wow, there are great investment opportunities here, right? So if you're thinking about, you look at Singapore. Singapore should just be an island, but they got it right with their policies that created something more. So I think you look at those lessons, and that's where you find the opportunity.
And it is about finding those opportunities. Chip, when we look at, I suppose, the concept of a brave new world, but in that brave new world, there's a lot of uncertainty, there's a lot of volatility, we have high interest rates at the moment, issues of monetary policy, geopolitics. It's a scary new world in a way. So where do you see the big solutions, and where do you see the focus? Where has it to be?
Well, I think there's two things that are completely different than what any of us have really seen in the last 40 years. One is the inflation dynamic, set off by sort of, rather loose both fiscal and monetary policy over time that's led to this sort of supply chain-induced inflation dynamic. And the other is we now have great power politics, great power conflict. And we have it between the two largest economies in the world that represent 40% of it. And I think they interact in ways that are meaningful. And so I think while everybody there's one narrative out there that sort of says, well, inflation rises, the central banks will raise interest rates. At some point there'll be a recession, interest rates will then come back down, and life will all be some version of what it was before. And I think there's another narrative out there that actually says economic activity is a little stronger than we think, and the reality is inflation's a little stickier than we think, and that we may live in a more elevated inflation environment for a longer stretch of time. And the implications of that, to me, are more about what it means for the sort of financial community, financial economy, as opposed to the real economy. And that adjustment in asset prices to a different rate environment, especially after 10 years of it being zero, is going to be very painful. And I think, in particular, it's going to affect those people that priced assets in more recent years in low-rate environments, or in businesses with less ability to adjust, or in structures that have either liquidity or duration mismatch to them. And so I think it's a very different world that is quite possible in terms of what lurks ahead, as opposed to a turn to the past. And the last thing I'd say is, when we sort of talk about this great power conflict, or deglobalization, as was talked about, remember, these are the two largest economies in the world. They're 40% of global GDP. And China is now greater than the combined global manufacturing, now more than US and Europe combined. That shift is a very complicated dynamic. And the degrees of interdependence are very high. And when you hear things like reshoring, nearshoring, that's also code word for higher cost. And so it loops back into the inflation dynamic and all of this. So I think the world ahead, we're at the very beginnings of this adjustment as opposed to the end.
And again, making that adjustment, I think people have to probably move faster. That demand is also there. Shu, talk to us a little bit about, when we look at, building new trade routes and just keeping business moving. Investors want to find opportunity. They also want to make a good return as well. Balance, risk and reward. Maybe it's time to really look at new frontiers. What's worked, before is not going to work again. So what do you say? Where do people need to be heading to make it work?
Jenny and Chip have described a world that's changing dramatically and is more risky. So it's a bit bizarre for me to say that I think the answer is we need to take more risk, because our priors need to be updated. The world just isn't the same. So whatever we thought was a safe haven is not a safe haven. Safe havens used to be the dollar, used to be US banks. There's a funny story. An executive from a big Brazilian bank recently talked in Chile, and he said a junior analyst in a Latin America financial institution would have been able a year ago to tell SVB that their strategy was wrong. Because here in Latin America, we know what it means when interest rates go up, and we know what it means when interest rates down. We're used to this environment. The US is not used to volatility. And so is the US a safe haven in a time that's unlike any previous time? Is the dollar a safe haven in a time that's unlike the last 50 years? Or are people who are more accustomed to change the safer place to be? So I think we need to fundamentally rethink what it means to be safe in a world that's changing, and to take more risk in places we haven't been, because maybe that's the safer place to be.
And we're going to talk a little bit more about where to go. Looking at that, Patrick, there's uncertainty, yes, the risk, indeed, the current sense of, I suppose, global market, dislocation. This should present great opportunities as well. So talk to us about where you look at maybe the need for diversification and the opportunities that are existing.
First of all, I think, I've been looking at investments across continents. This is sort of a part of my career. When I look at it today, I think there are a lot of dislocations. And certainly geopolitics plays a big role in this. And many of the entrepreneurs, actually, they're not prepared to understanding the complexity of this world, as both Jenny and Chip just stated. And I think it requires different skill set for GPs, investors, to help your companies, to guide them through this tremendous amount of complexity. And when people talk so much about politics, all of a sudden, you got paralyzed because there's nothing you feel you can do in other countries. And first of all, I want to thank the FII and organizing this event. I remember the sixth FII in Riyadh last year. I got a call from Richard. Richard says, "Can you help bring the Chinese entrepreneurs to the conference?" The conference actually took place last October, and China was still under COVID travel restriction. But I still managed, with your support, 50 Chinese CEOs to Riyadh. It was the first time they showed up after 3 years of lockdown in China in COVID, and showed up to a global market that was Saudi Arabia. And many of them, it was the very first time for them to come to the Middle East. They felt the world, actually, there's a lot of energy. Where, for example, you're coming from offers tremendous growth opportunities. Many of them actually stayed, extended their trip, meeting with the relevant parties. And so this is a way, when we think about the world today, there are a lot of opportunities, but the people needed to travel, to reach out, to interact, to understand where this thing fits for me. Ray Dalio spent 90 minutes with my group at the conference. And I said to Ray, Ray, can you give a single piece of best advice to the entrepreneurs? They're not investors. What would that be? He stole a line from Chinese. He says, a smart rabbit digs 3 holes. 狡兔三窟. He says, you know what? If you're an American entrepreneur, I'm going to say the same thing to you. You are really good, if I heard correctly, in renewable, in robotics, in a lot of things. Today, I would really recommend you to think outside your home market, find 2 other markets you can compete. And many of them, when they heard this, it's actually validate a lot of things they're thinking about. It's very counterintuitive. In this world, when people are pulling back, the entrepreneurs want to go.
I mean, I think that segues nicely into find us a new market, Shu. Just very quickly, we might have time for 1 or 2 questions. I feel like I'm awarding a prize, but we have our ushers running around. Please, very quickly, get their attention. I'm going to look to them. Direct a question, a burning question to one person on the panel. Keep it very short, and they'll do their best to answer it. But we're doing the express version here of how we're going to fix the world. So please make sure you're actually going to be ready for this. Shu, talk to me in terms of, again, you talk a lot about the narrative needs to change, and I think we've heard that from Patrick too. We have to look wider. Where should we look?
Yeah, I mentioned safe havens are not so safe anymore. But I want to build off this idea of entrepreneurs, because entrepreneurs are seen as this very risky asset class, right? Venture capital is risky. And I think that's completely wrong, because in uncertain times, who is better to problem solve and navigate uncertainty and try to find value than entrepreneurs? And the wonderful thing about that model is you give them a little bit of capital, and they figure things out, and then you give them more capital, and they figure more out, and it de-risks the businesses as they go. And some of the places that are least explored by entrepreneurs are emerging markets, Latin America in my case, where I'm focusing my time, because that asset class has not grown there as much as it has elsewhere. But to solve the challenges in a place like Latin America, the simple solution, the answer to the world's challenges is give entrepreneurs money and stage gate it and have them solve all the problems that exist. It's actually very, very efficient, much more so than top-down government mandates or anything like that. So that's my contribution to how to save the world.
And I guess when you look back, I mean, all of the big companies we have today started as small entrepreneurial enterprises, you know, and now, of course, they're huge.
The people we celebrate were founders.
Yes.
But now we enshrine them as executives. But that's not actually what we want.
So we need that shift. Chip, when we look, you know, in terms of, you know, business, finance, do you think we've all got maybe a bit complacent? And particularly we look back on the last decade, you know, it hasn't been that difficult. But now we really need to shift into a new gear. Can we do it quick enough?
Yeah, look, I think, you know, in many ways, a lot of what I said earlier, I'd say we all misread the pandemic. I mean, the ravages of it were terrible across the world as it played out. But it accelerated the policies around both fiscal and monetary that have sort of gotten us to this place. And so the answer is, yeah, I think we're going to look back, and those years are going to feel like a mirage relative to kind of what sort of lays ahead. And as I said, I think we're at the beginning of this process.
Jenny, have you, you know, at Franklin Templeton, have you had to adapt? I mean, you're investors, I guess you have to constantly be adapting, but you need more agility, I think, in the system, what we're hearing.
Well, I think this past decade, everybody was a brilliant investor, right? Interest rates were 0. The only place you could put your money was in the equity markets unless you qualified for alternatives, and everything went up. So now you're actually going to find you have to select good companies. There's a lot of complexity, which we've talked about here, and you're going to have to be informed by that to make good investment decisions. So I think this decade, absolutely has changed. That's why I'm a big fan of active management. So,
Patrick, when we look at, I suppose, what we can expect, there's got to be a few themes that you're working on, that are main focus. And unless we do this, we're not headed to the promised land, so to speak.
There's one way to look at the world by geography, but there's another way of look at the world by, what are the important growth themes for the next 10 years? As far as where I stand, I live in Shanghai. I believe there are three things that are very relevant for us from technology perspective. Number one is energy transition. And Chip was talking about we're actually moving into a more inflationary environment. Energy plays a big role. Now climate change is a pretty big deal. COVID set us back for 3 years. We haven't talked so much about it. And the other thing is demographics is worsening for every developed country. And so what is the solution to that? I think a partial solution to that, as far as I can see, is automation and robotics. And the third area is AI. I think AI, for me, is a lot more powerful than even internet itself. It's a reasoning engine. It's going to take us to new boundaries. It's going to add to human wisdom. I think this is very powerful, and also when you think about China, China offers two things. One is China has the largest industrial settings in the world, still today. The other one is very large consumer population. AI has to be applied to certain areas to really become, creating value. I think in these 2 areas alone, China would be a very interesting place for you to think about that. Still, in all these areas, when you think about it, it's actually the Chinese private companies that are playing a big role for the world. For example, 97% of renewable supplies are all made by Chinese companies. Most of them are private companies. So these are important themes we should be thinking about for the next 10 years.
Shu, do you think we've, in one way, maybe got to stop looking at the big global solution, because it's going to be a tough one to find, and focus on regional ones, like what's happening in Asia, in other areas?
Yeah, I think macro should have humbled us all at this point. Trying to make big macro predictions over the last 4 years has been a complete fool's errand, and it's a waste of time. Micro is much more reliable and controllable, and I think allocating capital on the basis of micro rather than macro is much more productive in that sense. And so, yes, I think we need to look where problems are and find ways to solve those problems at a micro level, and those will turn into good businesses because a problem is being solved, rather than try to predict where rates are going to go, which is...
Chip, you worry actually about our ability to solve and resolve things. And you talk about culture wars. Very quickly, we're wrapping this up shortly, but give me, your take on the issues about culture wars.
Look, the thing I worry about is, there's a link between the sort of geopolitical friction that exists on the one end and the culture wars that exist inside a variety of countries, the U.S. included. We see it in Europe and France at the moment. We see it in Israel. We see it in different places in the world. And the complexity of that is the solutions to some of the big, large issues, whether it's climate or the like, or the very local issues, whether it's education or healthcare, rely on some dimension of state capacity and some dimension of political discourse that solves those issues. And that's in short supply in an environment that two sides don't understand each other at all. Last thing I just add really quickly, I think which sort of builds off a point that just got made. I think in that world, as investors, the answer is to yes, we all have to live and worry about that macro environment we live in. But the reality is, it's no longer the rising tide. It's the ability to find the places that are interesting. And that is back to the real roots of backing entrepreneurs to grow and build great businesses, which is, I think, as investors, where a lot of our DNA began.
There's lots of things we haven't had a chance to talk about, and we're now at that sort of call to action part. But can you give me a call to action and throw technology in there as well for me?
Well, first of all, I think, as these guys said, I think actually the technology is really interesting in developing markets where you don't have tech debt and infrastructure, and you're seeing great innovation. Safaricom is a banking system all through Kenya. India has Flipkart, where you can be a seamstress or a rural farmer and suddenly have a platform to sell. Those are interesting investable opportunities with massive markets.
Again, a call to action if there was one immediately, what we can do, because it looks like the big call is urgency and we've got to move quick.
Well, look, the call, as I said, you always want to sort of argue for the ability to better understand and communicate with the side that you find most objectionable. Meaning that's the complicated place we live in. And whether it's the great U.S.-China divide, which I think may be the defining issue of our times, right? How do we live in a world with the two largest economies that sit in the middle of a variety of global issues that sort of have to get addressed? Or more in a local level, how do we kind of address the kind of daily needs? I think for all of us, the ability to at least try to put ourselves in the shoes of a crowd we, at some level, don't understand at all, is an important part of is sort of the call of the moment.
Shu, what needs to be done right away, if you
take risk? In an uncertain time, don't sit on your hands. Don't wonder what's going to happen. Take risk.
And I'll leave you the closing word
really
on
quick. We just saw a bank that sort of went away on the basis of buying government bonds. To your exact point.
Government bonds.
Take a different risk. He's got an
You
idea.
can take risk and be wrong.
I'll be taking a big risk if
part
I
of
don't
it.
wrap
It
this
wasn't
one up,
seen as
guys.
risky. But your point's spot on.
I'm going to have to hand it over to you for our big closing words of inspiration, Patrick.
And surprisingly, so yesterday, and I went to a friend's house, and he showed me a trailer of a movie his daughter has done, and she wrote the script, she directed it, and the movie is about to finish. It's actually about American single parent, a woman, and her struggle with life. And so what I just want to share with everyone, and in this world, let's not forget about the youth. There are a lot of people who are not as privileged as we are, and they're out there. Let's not forget about them. They need a proper training, need help, and we talked so much about politics, not about them.
Yeah, because it's about the priorities that are put in place today that make a better tomorrow. We do have lots where we're going to address all of that throughout this great session today, so we look forward to it. Once again, I want to thank you all. I know it was the Express session. Patrick,
thank you.
Chip, and Jenny, thank you so much. And thank you, our dear audience.